Okay, welcome everybody, and thank you for tuning in to my Q 2025 housing market recap, where I will be discussing the global, national market and economy, as well as our local Park City, what's going on a local level when it comes to housing. My name is Karen Stone, and I am a local realtor here in town with Coldwell Banker. I have been selling real estate since March of 2008, started in New York City, which means I have impeccable timing for getting into really, really tough markets. And so what we're experiencing now, while it may be new to many of you, these kind of fluctuations, I've definitely been through them. Obviously, everything is caused by something else that nobody's really expecting. So for tonight, I'm going to be talking about the what's going on a national level, then a local level. I will open it up to questions, and I will take your questions if you have specific questions about your specific neighborhood. With that, I will go ahead and share my screen, and we will get going. Okay. If somebody wants to unmute themselves and just tell me if you could see my screen, that would be really helpful.
I can see it.
Okay, wonderful. So you could see me and the screen, correct?
Yes, both.
Okay, wonderful. Okay. So there we go. A little bit more information about me. If you will be getting a lot of information from me if you have not already received it. But like I said, I am a local realtor here in Park City as well as in New York City. So for tonight, what I want to talk about is what's going on, what's the big picture. Many people have been kind of predicting or thinking that we are going to have a crash in the housing market. I'm here to tell you that that is most likely not going to happen, at least not in the same way that we saw back in 2008. What this chart shows, which was provided by the National Association of Realtors during a conference literally just yesterday, we see that homeowners have record wealth within their properties. And a few stats on top of that. What often causes a crash to happen is when mortgages are delinquent and foreclosures are increasing. We are actually seeing that on a national level. Distress sales are actually barely 2% versus 33% back in 2008. So you've got a lot of equity in your homes, especially if you bought before 2021, and ideally sometime between, not during the peaks of like 2013, 14, 15. But you do have a lot of equity in your home, which is causing fewer forced sellers. So people are kind of just waiting to see what happens in the overall market. What one way that we can generally predict what's going on in the market on a national level, and I am going to talk more about what's going on the Park City level, is what's happening with the mortgage applications. Mortgage applications do not necessarily mean that people are getting approved. What that means is that they are just applying for a loan, right? So what we have been seeing is since the rates have gone south closer to 6%, a little bit lower than 6% in the last few weeks, we have been seeing more and more people apply. That does not necessarily mean that they're jumping into the market. It just means that they're looking to see if they now qualify. And when you think about it, those that may not have qualified at a 7% rate might now qualify at a 6% rate. And we have to remember on a local level, about 50, depending on the month, about 50% of transactions that happen here in Park City are cash deals. Okay, next, we have to talk about mortgage rates. As you saw yesterday, the Feds decided to pause and not adjust the rates at all. What many people don't realize, and it's okay if you're in this room and you didn't know this. Sorry, back. Whoops, escape. Oh boy, oh boy, oh boy. what many people don't realize is that when the feds drop the rates, it does not imply that the mortgage rates will drop hand in hand, like a 1-to-1 ratio. Oftentimes, what we see is when something's going on in the overall economy, maybe President Trump makes an announcement, things within the banks start to shift, and they often work in when they're predicting that the feds might drop the rates, they start to already work them into the mortgage rates long before we actually see the feds drop the rates. In fact, if you look at this from a historical standpoint, what we have seen over the last several rate drops that the Fed did is that the mortgage rates actually ticked up a bit. So we have to remember that just because the feds drop the rates does not necessarily mean that the mortgage rates will drop. Obviously, as we could see here on this slide, mortgage rates are still influenced by inflation, which I'll talk about on the next slide, by our debt and our deficits, as well as the global capital markets, which, if you're tuning into the news at all, you know that a lot of these are being talked about a lot. There's a lot of headlines, there's a lot of fear, there's a lot of hesitation, there's a lot of false narratives out there in terms of what people are actually talking about when it comes to especially to inflation. On our next slide, okay, here is a nationwide forecast of what's going to go on, what they're expecting to happen this year. So last year we saw relatively flat numbers. Not very surprising. We're still kind of recovering from the COVID years, and we're still recovering from 22 and 23 when the mortgage rates shot up. So many are saying that 2026 will be a recovery year. We have yet to see if that will happen. Obviously, we're only 1 month in, but at least here in Park City, we are seeing that sales are happening, especially in our new development world. So they're predicting that existing home sales, that means not new construction, should increase in terms of number of sales, should increase by about 14%. New home sales last year dropped 2%. This year, they're expecting an increase of 5%. Median home prices last year went up 3%. This year, they're expecting about a 4% increase. And I can show you multiple charts that show that lots of different, that there's lots of predictions and they're kind of all over the board. Many are predicting that mortgage rates will continue to hover around the 6% rate, which, for those of you who don't know, 6% is the average rate for mortgages over the last 30 years or so. So my parents bought a home over almost 40 plus years ago at a rate, I think it was maybe 12, 13, 14%. They got a deal from the developer. And then obviously we saw the rates drastically drop in 2020. The average of all of those, from your 16% down to your 2%, has been around 6%. So what they are saying is that as these rates continue to stay at or drop just below 6%, that kind of implies that most people might feel a little bit more comfortable with these rates and say, okay, this feels more normal, and so now I will jump into the market. Obviously, we also have to discuss the job market. We saw last year with DOGE that a lot of the federal jobs were cut. However, we also have seen a lot of private sector jobs being cut, many with AI. So we're keeping an eye on that. So unfortunately, when it comes to mortgage rates, when it bleeds, it leads. So many people are hoping for that unemployment rate to continue to go up, thus causing the rates to go down. So we're waiting for something bad to happen so that seemingly something good can happen. And remember, about 50% of our buyers here in the Park City area pay cash. And obviously in that $2 million, where a majority of the deals happen, from the low end all the way up to about $2 million, that's where a majority of the sales happen within Park City. So if your property is sitting in that range, keep in mind that your buyers, 50% of them, are still very rate sensitive. Next slide. Other things that we have to consider is insurance and taxes. Insurance being a really, really big deal in California, in Florida. We are hearing, obviously, that many homes are uninsurable. Here in Park City, there are certain areas and parts of Park City where insurance is getting harder and harder to get. As it gets harder to get, that then that then impacts home prices and how long homes tend to sit on the market. So while we have to, obviously consider inflation, and if inflation goes down, we have to consider, can I even insure my property? So many people are figuring out what are their monthly costs, and that's when they're deciding, do I buy, do I sell, can I afford it, or should I continue renting? Moving on to the next slide. We know that there are a lot of headlines out there, and it seems like the president is kind of throwing out any kind of opportunity to see what might save the housing market. Just recently started with the Fannie and Freddie mortgage-backed securities discussions focused on market liquidity and stability. This is a very risky move. We'll see if this actually happens, but this in itself, if more loans default, we could be in a lot of trouble if this actually happens. President Trump has also said that he's banning corporations from buying in mass quantities of those entry level homes and condos and things like that. This has less impact on our luxury and second home market. However, it is important to note that corporate buyers actually don't account for that much of the market as a whole. So obviously he is considering certain areas, but it's less likely to impact a majority of the country when you have individuals like you and like me purchasing properties and fewer large corporations buying. He also threw out the 50-year mortgage, right? Thinking like this will help people realize that, it's buying a home is more affordable. My personal opinion, that's a long time to hold a loan. I don't know if I'll be alive for another 50 years. And a majority of people, we have to look at like how often they're actually selling properties. So they could actually end up paying more money for these 50-year mortgages in terms of just the interest than they will on the actual purchase price of the home. Again, not super relevant for the high equity and cash buyers. The tariffs, indirect pressure, they can trigger certain things like construction costs. They can affect inflation. They may increase the relative value of existing homes because of those costs. So if you're considering, or people who maybe bought land in Promontory and have been considering, building, many of them, and we saw this a lot over the last year and over the last few years, actually saying, you know what, I'm going to sell the land and I'm just going to buy something that's already done because I don't want to take on all these extra costs. Add in the tariffs and it's now even more expensive. However, I have been hearing a little bit of a mixed review on that, depending on where they get the product and who's building it, and if it is in fact made in the U.S. Another conversation that's going on right there on the national level is the capital gains tax. Many of us, especially if you've been in your home for decades, you bought at a low, at a low or whatever it was at market value at the time, and you think, well, when I go to sell it, I'm going to own it, and all of that profit is going to be mine. But as we know, we've got that capital gains tax. So there are conversations going on about, how to adjust those, how to make some exemptions. But we don't expect that if that does pass, where maybe they limit it or do away with it, which is not likely, it's not likely to trigger mass selling. But that right there, that capital gains tax, is a huge reason why many baby boomers in particular are holding on to their homes, because they don't want to pay that tax. And And, like they obviously want that cash. And with already very tight inventory to begin with, it's harder for them to move around. I actually ran a really interesting report about the mortgage rates overall. I'm going to get out of this just so I can see. I want to jump into some notes that I took about mortgage rates overall. Because I did want to make sure that I knew this stat. So, what percentage of homeowners have a mortgage? About 62% of US homeowners have a mortgage, and 38% own it free and clear. 82 or so percent have a mortgage rate below 6%, and 55 to 60% have a rate below 4%. Okay, so most owners are not rate pressured. They're selling often means giving up a favorable loan. This dramatically, these stats alone dramatically reduce forced selling. So inventory, it will rise slowly as we've been seeing it here in Park City. I've personally been seeing it with a lot of my clients saying, you know what, I'm just done with Park City. I want to move my assets somewhere else. I want to buy a home somewhere else. I'm rolling my investment property into another property. Many of them are just saying, now is just the time. And we're going to talk more about that as well shortly. Let me get back to the screen share. Are there any questions at this point, by the way, while I'm stopped? Okay, so we will keep going. Okay, so our next slide, we have to talk about the overall luxury market. As you saw in the previous slides, those were all provided. Those stats were provided by the National Association of Realtors. These stats were all provided by the Coldwell Banker Trend Report, which I will be sending you as well. So the luxury market definitely is a market of its own. We are considered a luxury market here in the Park City area. Even if you're sitting on a property that's about $1 million, in many markets, $1 million is considered luxury. But luxury markets do not generally follow the traditional boom or bust cycles. Affluent buyers, like we see here, especially in our very, very high end price points, are less rate sensitive. They are less leveraged. They see something that they want, they buy it. The person who bought the $65 million property in Deer Crest, that guy had been circling. He bought that. That was his seventh or eighth home. Obviously, that is an anomaly. That's not quite the norm here, but we are hearing that more and more people in that luxury price range are just they are kind of leading the market right now, which when we talk about a national level of who's spending the money, because we're all hearing like, sales were up during the holidays. We're in a bit of a K economy, which means the wealthy, the ones who have money in the stock market, they're doing very well. The homeowners, they're doing very well. The ones who are renting don't have money in the market, living paycheck to paycheck, maybe in those, one of those jobs that got eliminated, they're the ones that are struggling. So in this slide, we're specifically talking about the higher end of that K. Okay. So real estate remains a long-term wealth preservation asset, and high equity ownership limits forced selling. What that says here is people are not in a rush. They will make a move when they want to add to their lifestyle, remove something from their lifestyle. But when we see kind of a slowdown, that's not because of a price collapse. It's just because it's just not the right time. And that's very common here. Buyers are active. They are out there, but they are more selective, especially as inventory levels, which I'm going to talk about overall in the Park City market, continues to go up. Buyers are taking their time. They don't have to scramble. And many sellers are also taking their time and they're saying, we don't quite have to sell. So longer decision timelines do not equal weaker demand. They're still looking, they're just taking their time. And pricing and condition matter more than market timing. So, especially in this luxury market, and we are seeing this here as well, low turnkey, low maintenance homes. Many of our buyers are looking for what is new, one is renovated. I don't want to do any work to it. I'm willing to go elsewhere out of the immediate Park City area to get something new, like maybe over by the Deer Valley East Village, to get something newer, even though I have to give up my walk to the slopes, benefit. Luxury real estate is extremely hyper local. We've got limited supply. However, we see that it outperforms over time because it's so limited. And there is a scarcity. There is a lifestyle that we need to that we all are trying to protect through with long-term value. And buyers are comparing markets globally. So I remember selling and I go back to New York not super often, but often enough where I'm involved with the market and looking at like the towers on Billionaires Row, and you see building after building 25 million, 40 million, 50 million, 80 million, and you think to yourself, how many homes does somebody need that are in these price ranges? And where else are they looking? Are they just looking in New York? Maybe that $65 million buyer is also looking here in New York. Maybe they're in Park City. Maybe they're going to Aspen. Like, they have options. On a smaller scale, think about it like, if I have $1 million budget, am I looking at the base of Park City at a 2-bedroom condo, or am I going to go out to Black Rock Ridge and get a 3-bedroom townhome, right? Same thing, same budget, but just different, obviously a different lifestyle. So the resort and primary home, there is a lot of crossover appeal, and owners hold for longer and sell less often, which is why when you see some of these homes hit, some of them, when they're overpriced, there's a lot of them actually for sale right now in the Colony, and many of them are just sitting right now. But once we start to see maybe a little bit more snow, I think we'll start to see more buyers. So now let's talk about the Park City market. I love this chart. Pended sales. This is provided by Rick Klein. If you know him, he was a mortgage broker. He's also one of the writers of the Park City Follies. So he is a local here, and I just geek out on his stats. But what we see here in this chart, if you look over time, it goes all the way back to January of 2018 through October and beyond of 2025. Pended sales, which indicates demand, only went up about 1% year over year, which was exactly what we saw in that NAR stat that said that sales were basically flat last year. They're expecting 14% this year. So we'll see what happens there. Closed sales were less than a 2% change versus 2024, up 14% to 2023, and about 1% above pre-COVID norms. I do need to mention here, and I want you to be asking this question, and I will talk about it, is how much of this inventory and demand is existing homes versus new construction? That is something that most ski resorts and mountain towns do not have, the amount of building that we have here in Park City. So even though these stats look all flashy and all, at least the 14% compared to 2023, at least we are seeing kind of we're basically equal, even with where we were last year, even with new construction, which means if you pull out that new construction, the market actually did a little bit worse, which for those of you who I've run comps for, this is a good thing for you if you're going to be appealing the value of your home and your taxes. We did see, and I did hear this same anecdote in the meeting yesterday with NAR, that there was a little bit of softness in December. I experienced a little bit of that here. I'm experiencing a little bit of that now here in the Park City market. However, that was an anecdote that was shared on a national level as well. However, we continue to see prices over time appreciating about 7.4% annually, compounded monthly. So if you're looking at that red line, you see that yes, things go up and down over time. We know that that is normal for any market, but the good news is that overall we have seen that since the downturn of 2008, we have seen prices going up overall. So if you know anybody who's saying, I'm going to wait to buy, waiting for what, right? Again, there are always corrections, especially since the 2021, boom. You might be able to find something for a little bit less right now, but we have to remember overall, like prices are still going up here in the Park City area, and the values of our homes are still pretty protected. Let's talk about inventory. I love this chart so much, and you don't have to really look at it so closely to see that there are obvious trends that go on seasonally. Park City is a very predictable market. It did take us a little bit of time to get back to that. As you can see, from 2020, we went down. We went just down. I think at one point, I think it was February of about 2021, we only had about 250 listings in the Park City MLS. The Park City MLS covers all of Park City as well as the Wasatch and Heber, Camas. All of those are included in our MLS as long as those agents are members here. But as you can see, from about 22 to 26, we see this seasonal flow. It's like a wave, right? They go down in the winter, up in the spring and summer, and back down in the fall, and back up and back down. So as of January 1st of this year, we had 819 listings compared to 721 last January 1st. Again, we have to consider how much of this is new construction, which we do have quite a bit of new construction hitting the market over in the Deer Valley East Village area. But overall, we are seeing that that's a 14% increase over last year. Condos are up about 48%. Keep in mind that a lot of what's being built over by Deer Valley, they are condos. Single family homes up about 6%. So if you're considering maybe selling, or you're wondering how the single family home market is, it didn't go up as high as condos did in terms of active inventory. In fact, anecdotally, I worked with a buyer, anybody looking for single family home in the Park City School District for under 2 million. There are not a lot of options out there. So if you find yourself in that range, that is a hot market right now. So we should talk if you're even considering it. And vacant land went down 21%. Okay, here are the overall stats year over year. I like to look at these blue lines right here. So we see single family homes as that first section, followed by condos and then land. This is overall Summit County and Wasatch counties. I will break this down for you. I will show you other charts shortly. But as you can see, in 2024, there were 1,020 homes sold. And in 2025, 1,085 homes sold. That appears to be a fairly big difference, 6%. Again, we're going to talk in the next couple of slides about new construction. The volume at 2.5 million. So that means all of those quantity, all of the values of the homes combined, that's the volume, was about 2.5 million in 2024, and it increased up to 26. It increased 26% up to 3.2 million in 2025. The average also went up 18%, and the median went up 15%. Again, we do have to consider just how much of that was new construction. There was not as much new construction in the single family homes as there was in condos. However, you look at the next slot at the next number and you see in 2024 there were 946 condos sold and 859 sold in 2025. So it was a 9% drop. However, an increase in volume of 20%. Average price went up 32%, median price went up 20%. A lot of that, again, is over on the Deer Valley, East Village, and on that side of the mountain. And land, our sales decreased 11%, volume decreased 14%, average price went down 3%, and the median went up 13%. Again, with such limited inventory, we just have to look at like where was that land. A lot of that land was in, people buying lots at the Deer Valley East Village, at Marcella, just not as many lots available, specifically last year compared to 2024. Let's talk about new construction versus existing homes. This is an important numbers to know. In town, meaning from the White Barn over to the Deer Valley area, 9% of the inventory is new construction. In Snyderville Basin, 15% is new construction. That includes everything in Silver Creek Village, as well as in the canyons, where there's a lot of new construction going on. And then the Jordanelle, which does encompass everything around the Jordanelle. So that's on both sides. So that is Deer Valley, East Village. 59% of the inventory over there is new construction. 59%. That's a huge number. I didn't break out any other stats in terms of like increase and decrease. I can show you that. We can look specifically at new construction versus not, and look at the values of homes in your specific area. Heber and Camas continue to almost be neck and neck in terms of the homes sold there, with new construction being a huge chunk. I myself am just closing on a property tomorrow, not me personally, but one of my clients. They're moving from the Black Rock Ridge area over to the Heber area, where they're getting a much bigger home for just a slightly more than what their Black Rock Ridge home is worth. So what's actually happening in Park City? We have to talk about some anecdotes about, what we've been hearing, what we've been talking about, what we're seeing. Buyers are skewing a bit younger. On a recent call with our board, we heard that a lot of these buyers are in their 40s, coming in with this cash and some financing, which makes sense when we consider the one stat that I didn't share about the luxury market, which is the generational transfer of wealth from the baby boomers to the older millennials, specifically women. So if you're considering who you might be selling your property to, what kind of buyers are walking in, they, especially those that are the recipients of this transfer of the wealth, they are the older millennials, and many of them are also women. So this stat specific was especially for Old Town. We continue to see out of state migration. Many people throughout. We're seeing a lot of Texans who are coming here. Has in large part to do with their taxes as well. With more full-time relocations versus second homes. I've been having a lot of conversations with people about, do I stay in Florida where my insurance is higher? Do I come here where the taxes are a little bit lower, et cetera. Buyers are also, this was a really interesting anecdote that came up specifically in Promontory, where they shared, somebody from the sales office shared that buyers who might have bought like a 6,000 square foot home, let's just say for, $5 or $6 million, they ended up buying something smaller in a similar price range. So they have the same budget, but they want a smaller home in large part. Maybe they're easier to get insurance for, and many of them just don't need that much space. So when you're considering, like, if you own a home, bigger does not always mean more valuable. We've seen that over time, that, more and more bedrooms and more square footage, oftentimes that doesn't mean a higher price per square foot. But what we are seeing is that people are willing to take a smaller home and still keep the same budget. So they're not dropping their budget, but they do seem to be drawn to some of these smaller homes. Um, we continue to see that there's a strong preference for new or recently renovated properties, and we still see that resistance to major remodel projects. So, unless you are priced really well to reflect the condition of your home, do not expect your home to sell for top dollar unless it's in a prime location, like you can walk to the slopes. Even those, I'm sitting on a property right now that is in Three Kings. That is one of the lowest prices. It's one of the smaller units, but it needs a renovation. And even buyers are walking in and saying, you know what? It seems like a good deal until I factor in the renovations that I need to do. This particular seller is loving all of the rental income that they're getting during the winter, so they're not in a huge rush to sell, but the feedback continues to be, I'd rather spend a little bit more to get something newer. Next section, the sellers are baby boomers. And we are going to continue and see possibly more of those nightly rentals, those short-term rental properties hitting the market because of rising expenses and also because of softer rental performance. Many people, including myself, asked, when will we start to see the impact of Sundance leaving? It's not going to be immediate. We likely won't see it until like maybe towards the end of the year, when people really start to look at their numbers and consider, like, oh, okay, so I made a decent amount. Number one, we haven't had great snow, so that's really not helping us. Sundance is leaving. They might say, you know what, I'm just not getting the numbers that I need, so I'm going to list my property. I think we are going to start to see that more and more. And well-priced older homes are still selling if the fundamentals are strong. Like I said, the location, the views, the overall income, if it's an income generating property. Product differentiation, new construction generally commands a meaningful premium. Keep that in mind. Golf memberships. This was a specific anecdote from our friends over at Promontory, who said that just having that golf membership added about $850,000 to $1.1 million in perceived value. Okay. And buyers are willing to pay more for those move-in ready conditions, the amenities, and the lifestyle convenience. What we are expecting in this year, we are expecting inventory is likely to remain elevated. Right now, as I mentioned, in the winter, we do tend to see numbers a little bit lower. I think we're at about 1050 or so listings in the Park City MLS. During the spring, summer, we tend to hit around 12 to 1300. So again, inventory is very seasonally predictable. However, we will have to see what happens with the economy. Are people going to be saying, I'm out of here because of the snow? I am ready to downsize. I'm ready to right size. I want to trade up, whatever they may be. Life happens and inventory continues to hit, which is great. Demand, we do expect demand to remain consistent. Thankfully, we're not in a market where we are so impacted by that unemployment rate, because many people are not coming to Park City and buying here specifically because they're working here. Many are still working remote. So I think the demand for the lifestyle remains consistent. The interest rates can often dictate speed, but maybe not the direction. I have quite a few buyers, especially cash buyers, who are just waiting for the right product to hit. They're not looking at those overall rates. Well-priced, let me repeat that again, well-priced homes transact. My personal strategy is, if your home is sitting on the market after 30 days or 30 people, whichever comes first, 30 people through the door, whichever comes first, if you don't have an offer, something is off. It might be the marketing, it might be the access and the condition, or it might be the price. Most of the time, it is the price. And if you are considering selling, I really encourage you to look at the comps and to really not just look at what has sold, but what buyers are looking at today. I have a listing right now in the Black Rock Ridge area. It faces the highway. Not ideal, but I sold literally two that were the same exact floor plan, one within about 4 days and one within 30 days, where the average there is about 60 days plus. And I had the recent comps. These folks that I'm working with, they're not super motivated. We're priced above those what those are selling for. I've tried to get them to drop it. They're not motivated to drop it more. However, I had a buyer come in yesterday and I asked the agent for some feedback. And she said, you know what? They don't want the highway. I said, where else are they looking? She goes, they're looking in Pine Brook. They're looking in other areas. So you have to consider, as a buyer, where are they looking and how is your home positioned? Is it newer? Does it have those views? Does it need work? Is it in a more prime location? All of these are things to consider. As you can see there, it says overpriced homes sit longer, and that we know. So while it's not a flashy year, what we are saying is that this is a workable year. It is, again, if we can keep things boring or predictable, that is not a bad place to be. So I'm going to stop sharing here. And I saw that there were some comments in the chat. And somebody said, I'm a mortgage broker in 11 states and not many people are qualifying for many reasons. So rates are 6.125% today. And a couple weeks ago, I think they hit 5.99. So you're absolutely right. Many reasons, they're just not, they might be applying, but they're not qualifying. So do not think, if you're considering selling, that just because the rates are going down, that's all of a sudden buyers are qualified. I want to I want to reshare my screen with you and show you kind of neighborhood wise what's going on. Okay. So this, what I want to show you, these are all the stats from our overall forum. I want to break out and share with you a few little anecdotes here of what we're seeing overall in our market. This is single family homes broken down by neighborhood. Each neighborhood has a number. So 1 through 9 is in town, and 10 through 29 is 10 through 23 is in Snyderville Basin, and then we shoot out to the Mayflower Jordanelle. So does anybody have an area that you want me to look at, and we can see kind of what happened year over year and look at those stats?
How about Park Meadows?
Park Meadows. Okay. That's actually one of our favorite neighborhoods. So we saw overall sales. Can you see this okay?
The print's pretty small.
Oh God. Hold on. Okay. Single family homes. Is that better?
That's better.
Okay. So overall sales, the number of sales went up 40%. So there were 10 more sales last year than there were the year before. Overall volume went up, it was at 140 million. However, we are seeing that the average and the median were down. So 5%, I think that's the average. Yeah, 5% average price decrease and 2% 2% median, with just quarter over quarter. If you look at Q4, down 23% and down 21. I like it for those of you who are curious why this matters. Many of you have asked me to help you appeal the value of your home, and the assessor's office will pull whatever comps they're going to pull I'll help you pull comps as well. That's what I provide. But I also want to provide you with enough other ammunition. And this is exactly one of those stats that the assessor's office tends to use. They look at they look at this release, they look at these numbers because it's at the end of the year. They're looking at the value as of January 1st, and they're making assumptions that, for instance, here in Prospector, average went up 8%, median went up 9%. Oftentimes they will say a blanket statement, okay, all Prospector properties, they should go up 8% because that's what the board said happened based on the stats. So I'm not telling you that your home went down in value by 5% or 2%. But I am telling you that if we are in a position where you do need to appeal, this is one of those. This is just another tool that we would use. What other neighborhoods? Feel free to shout them out or put them in the chat.
Jeremy Ranch.
Jeremy Ranch. Okay. Let's go down here. All right, Jeremy Ranch, only 2 more sales last year compared to 2024, with average went up 1%, median went up 12%. So there was probably a couple of much larger homes or more expensive homes that caused that median to go up. I see in the chat, Jordanelle, okay. Jeremy Ranch, Sun Peak, let's go there. Whoops, sorry. Okay, Sun Peak, only 15 sales in 2024 and 14 in 2025. My personal opinion, this is a very low number. What we generally say is anything under 10 is not really enough of a sample size. So this is a very low sample size. But because of that, we did see the average went up 22%, and the median went up 42%. That's a huge jump for 14 sales. But it's good to know and keep in mind that that also includes Bear Hollow, Jordanelle, and Deer Valley East. Keep in mind there are not quite as many single family homes over there. So I will show you condos as well, just for kicks. So there were 10 homes sold in 2024, 15 in 2025, with an average change of 12% increase and an 8% for the median. Pinebrook. And I'm just showing you like general numbers. If you want, I'm happy to run even deeper, searches and look at like specific property types, and show you exactly what happened. So Pinebrook in 2024, there were 31 homes sold, only 25 single family homes in 2025, where the average went up 7% and median went up 9%. Silver Springs, you would think by now I would know my numbers. You had the number of sales actually went down quite a bit. So that's a good sign if you are considering selling in the Silver Springs area. Not a lot of competition. However, the average went up 11% and median went up 10%. But with only 20 sales, if I had to put on I need to appeal the value of my home, that number does not give us that many comps to work with. Jennifer, thank you for tuning in. Let's go back to like happened before. Oops, hold on. The screen's too big. Okay. I want to break down the condos for you because I think, especially in the Jordanelle area. Okay, so here's where the magic happened in the Jordanelle area. 79 sales in 2024 and 72 in 2025. We do have to consider exactly that there were multiple developments that all started to close last year. So we saw a 12% increase there and in terms of the average, and the median went up 22%. I do want to show you while I have you what else I have access to. So if you have specific needs, you feel free to reach out to me. This is our Park City Board of Realtors. These are just some of the stats that we have access to. So let's just look at, you know, um, what can we look at? Let's look at the median sales price. I'm going to show some filters here. I'm going to select, I believe one of you asked for Park Meadows. So we'll dial it in there. No new construction. As you can see, I'm really dialing it in, just no new construction. And maybe homes, let's say under 4 million. Like this is how much I can break it down. Okay. Just so you know. So you could see here 3.4 was the median price at the end of last year. And we can just kind of see it go along the way. I think what's important also that we note here, and I'm keeping all the filters the same, is the number of sales we have to work with here. 4. In October, there was 1. There were 5 in August, right? Like you can see here that we just don't have a huge sample set to work with. So if you have specific questions, I encourage you to just reach out to me. I'm happy to pull these stats for you. As you can tell, they don't take me much time. I am a bit of a stats geek. And I like to, because I do transact a lot with buyers and sellers, I have to stay on top of what's going on here in the market in all different parts. So I sold it last year on Main Street all the way out to Black Rock Ridge, Heber. I'm kind of all over.